All right, welcome back to another episode of the DePIN Coffee Hour. Actually, this week it's the future of DePIN show. As always, I'm joined by Bradley. How's it going, bud? How you doing?
I am doing well. It is a beautiful morning here in Chicago. I think it got down to like -4 last night.
It was that Fahrenheit or Celsius?
That's Fahrenheit.
Celsius. Fahrenheit?
Oh yeah. This weekend it's supposed to get to like I forget negative Saturday, like -7, but feel like negative, like 18. I think it's brutal right now.
Yeah, we were like feels like -7 degrees Celsius here.
Oh, it's rough.
So
man.
that's I think that's colder, but I get a bit confused with Fahrenheit, to be honest. That's one of the ones that I just am not good at doing the conversion to metric. Well, anyways, look, today we are going to talk about the DePIN projects that we're kind of bullish on for 2026. I think stuff that we feel is worth keeping your eye on. So that's going to be everything. I'm guessing. I actually have no idea what you're going to, which ones you want to talk about. We did not compare notes before this show, so this should be interesting. But everything from GPU, clouds, everything in between, I would say. But basically, I think these are going to be the networks that are actually moving revenue and not just pushing narrative, basically. So,
I do want to kind of start though the conversation around the general landscape right now because
cool.
I think we should address that.
Before you do that, if you're tuned into this and you're watching the show, hit the subscribe, like, follow button, notification bell. If you haven't done it for Brad's channel, DePIN Connection, why on earth not at this stage? Honestly, you should have. Go do it now. If you're watching us here on DePIN Coffee Hour, awesome. Love to have you back again. If you haven't subscribed, do yourself a favor, stay up to date. Hit that button, and if you hit the like, obviously that helps us with distribution. So you would have my eternal gratitude. And yeah, we'll continue doing this and continue trying to bring you interesting content about DePIN and DePIN projects and all the rest of it. So with all that said, let's talk about the sector. What have you got for us?
Yeah, so I just want to kind of talk about like where we're at from a macro standpoint. I think in the last couple of weeks, there's been, I don't know, there you still have the people that are building in DePIN and are like heads down. And obviously the prices have been pretty rough the last year. And then there's some people that have come out and are starting to dance on DePIN's grave, like saying it's completely dead and all this stuff. So I think it's important to have context here. And I think this will feed into the whole conversation, but look at the macro side of things, of what's taking place. I don't know if you can throw that up on the screen. I shared my screen there. I think for part of this, the whole market is still recovering from October 10th. If you know, I put a video out. I highly recommend you guys watch this. It talks about the pricing issue, the internal pricing issue with Binance and how that caused the largest liquidation event in history. And it was very much negligence on their part. So I highly encourage you to watch that. I go through all the details of what happened and why that washout took place. It's going to take time for us to recover from that. I think we're starting to finally see liquidity recover to an extent. Of course, over the weekend we had more tariff scares that didn't help matters. So that's always going to happen, I think, for the next 3 years at least. I don't know. What are your thoughts on that, Neil?
I mean, honestly, I feel like I should probably stay away from talking about politics because I think I'm going to do myself more harm than good. But just to, I just want to quickly show something, and that's not it actually. Sorry, let me just grab that window. I just want to show you this because I was in preparation for today's show. I was looking at, sorry, I've got 50 million tabs open. I'll find it. I think it's this one. Yeah. So just you're talking about landscape, right? I'm going to just share this tab instead. Okay. So, if you look at this is the 1 year chart for the comparison of for sort of what you might consider to be blue chip. And I think we're probably going to dive into each of the cryptos kind of more individually, or each of the projects more individually later on. But just wanted to look at like zoomed out, right? These would be kind of the 4 of the bigger projects in DePIN or more mature. But if you look at the 1-year chart, like you get a very different picture than if you look at the 30-day chart. So for everybody saying like DePIN is dead, I think you're wrong. I think you're behind what's actually happening. Like towards the end of 2025, we were seeing that, I think it's fair to say that a lot of DePIN projects were kind of willing to admit that, they had focused a lot on tech and building awesome technology, because it's a really challenging thing to try and solve for. Some of the problems that you have to solve for with decentralization, made more so, when you're talking about networks and all that kind of stuff like that. So the technology stack is really tough and challenging to build. And I think a lot of 2025 went into building the tech. I think 2026 is going to be more about building the revenue side of things. And I think what we're going to see is that's reflected in the token. And I think that people who are saying, "Oh, DePIN's dead, sell now," and all that, I think those people are just behind the curve, and they're going to be the ones that like later regret it. Basically, that's my personal opinion. I think macro tariffs and Trump and politics. God, there's so much unknown there. I don't know how you could possibly start to try and forecast with that.
Yeah, I agree. I mean, I have a slightly different take on the DePIN side of things. It'll go into like when I talk about the projects that I'm interested in. I have a whole thesis for 2026. I've adapted based on what we've seen over the last few years,
right.
What's worked, what hasn't, what I've gotten wrong. So I'm gonna like break all that down. But I think you're right. DePIN's not dead. Like I think you just have to be a little bit more selective. And I think we now have a blueprint for what can work and what can't work. And you have to kind of make those mistakes. You have to see projects make those mistakes to sift through that. I do want to talk about the macro side a little bit more, though, if unless you have anything where you want to add there.
Yeah, I just want to say like this is just about the crypto thing, not being dead. I'm just going to share this. This is CoinMarketCap's cryptocurrency by sector. Now it's the 24-hour price change side of things, but just forget that for a second. That's the ordering thing, right? If you just look at the market capitalization for each of these, let's call them categories of the cryptocurrency Web3 space. Other than like this sort of layer 1 ecosystems, you've got AI big data with the market capitalization of 18 billion. Real world assets, RWA 41 billion, gaming just under 9 billion. I can't believe that, to be honest. I feel like that's massively undervalued. But in any case, and then DePIN at 23 million. So DePIN is, from a market capitalization perspective, so in other words, the amount of capital that's tied up in the space is bigger than AI and big data at the moment. That's just an enormous amount of money to be tied up to be saying it's dead. And like that is not money that people are going to walk away from. There's an enormous amount of investment that's happened, and the investment always leads the inputs always lead the outputs, basically. So I'm still super bullish on the space at large. And I have also got an investment thesis. It's not really for 2026 because I'm not a good trader. I do not trade well. Despite knowing a little bit about reading charts and technical analysis and stuff like that, I don't. That is just not my forte. My forte and the way where I've made money in the past is by getting into things when they're kind of fairly early on and just leaving them alone. Buy a little bit, leave it alone, and then wait for like 5 to 10 years, and then it starts to pay dividends. Wait till the next cycle.
Warren Buffett mindset, man. Buy value and buy fear. That's basically.
Yeah,
basically.
Exactly.
I mean, it's tried and true. There's no doubt about that. Let's see here.
So
I think that makes sense. Look, I think Well, I'll get into it when I talk about the projects and my thesis for 2026, but I do want to just paint the picture for the macro real quick. I've got a
Sure.
few tabs I want to share here, just like kind of talk about what we're seeing. Maybe you can pull that up.
Oh, sorry. Yeah.
No, you
Sure.
good.
There you go.
Okay. So this is the only thing I'm going to talk about with tariffs. We've seen this time and time again, guys, where on Friday after markets close, the president will say something about tariffs, threaten tariffs. This is what happened with Greenland over the weekend. And it's very timely, right? It's to give the weekend a chance to digest everything. And then generally right before the markets open, he'll release a statement to smooth over tensions before the markets open. That works for the stock market. And this is exactly what we saw here, by the way, guys. Like I predicted this like 2 days ago. Sure enough, last night, before the markets opened today, he talks about his very good telephone call with the Secretary General of NATO. And all of a sudden starts saying, hey, things aren't anything to be worried about with all of this, you know? So we've seen this playbook so much over the last year. What sucks for crypto is that we trade 24/7. So this does not protect us from volatility. And this is something we're going to continue seeing, in my opinion. Now, on the other end of things, though, if he makes a statement during the week or during hours that the stock market's open, generally that's good news. So I've watched this trend play out time and time again. But that's the one big takeaway from all this is that in crypto, especially because we're trading 24/7, we have to acknowledge that there's going to be volatility under this presidency. I think there's going to be a lot of volatility. And whether or not you play that or just hold spot is up to you. Personally, trading on leverage with this type of volatility, I don't know that it's necessarily a great idea. But
It's Russian roulette. It's a terrible idea. I mean, like you would have to have some edge and some. I mean, you may as well just play Russian roulette. Honestly,
it's like
your entire financial future.
Yeah, that's kind of my take on it. But there's some people that are still winning. You know, it's really up to your risk tolerance. But just know that you're playing against that volatility, that unknown volatility. Not to mention that I think we noticed after October 10th. There was some very suspect price action. You know, there's a lot of big market makers got wiped out after 10/10. I think it was very evident they were working with some of the centralized exchanges that can see the order books and were wiping out leverage to the upside and downside. And we saw it time and time again through the end of the last year. So know that you're trading against insiders. That's one of the things that the Clarity Act should hopefully clean up a little bit. We'll talk about that more in a minute. But the first thing I want to call out, though, moving on, is just to put into perspective where the money flows have gone. I think it's really, really important to comprehend the fact that gold is sitting at almost a $33 trillion market cap. I mean, I think it added around $10 trillion last year alone. Silver now has moved above NVIDIA, sitting at over $5 trillion. Bitcoin's at $1.8 trillion. Okay, so you start thinking about this, all of crypto is under $3 trillion. I mean, silver's added that in the last year, all of the entire crypto market cap. So, and here, I'll show you. Actually, I have this tab open here. I mean, this is all of crypto sitting at just over $3 trillion. So you start, isn't that wild? So like, you look at you look at the precious metals. Like I put a decent investment in silver last year. Looking at like copper, natural gas now. But you start thinking about this, like a lot of these precious metals and the stock market in general are starting to look a little bit overbought. I mean, they're sitting at all-time highs. They pumped so much. It wouldn't take much of a rotation to see a huge impact on crypto. And I think that's, you're looking at these other assets that are just like huge buckets of capital. Crypto is just very small, man. So I think, we need to keep that in mind right now. We've seen a lot of negativity. I think we really disconnected from the other markets, these other asset classes after October 10th. We saw this back when FTX happened. It took some time to recover, but I think that we will see a little bit of catch up here. I don't know if there's anything you want to add before I move to the next tab on that.
Not really.
Okay. The other thing I'm keeping an eye on here is the Fed balance sheet. We had This is basically quantitative tightening is when you see them add to their balance sheet. Or sorry, no, quantitative easing is when they start buying, they start adding to their balance sheet. That means liquidity is going into the market. We've seen them tightening now really since 2022. You saw this small blip here. That was when we had, Silicon Valley Bank and the bank bailout. But other than that, we've seen treasuries run off the balance sheet, essentially tightening financial conditions. We're starting to see tightening ended back in December 1st. We're starting to see a little bit of expansion. So they announced they're buying T-bills. Notice we still have treasuries running off the balance sheet that they have to then buy and replace. So it does appear that the pace at which they're buying treasury bills is exceeding the runoff of the treasuries we have. So good to see a little expansion there. Nothing crazy, okay? But it is good to see some expansion nonetheless. And I think the big question that everyone's asking is, who is the next Fed chair going to be? May 15th is when Powell's term is up. So there's a lot of discussion right now about this. Hassett was a lot of people's favorite. He's down to 5%, basically is out of the running now based on some comments that Trump made recently. So you look at some of these candidates, like Kevin Warsh is in the lead right now. I don't think he would actually. You think so?
Polymarket is so good at predicting.
They are.
I think every time Polymarket, I haven't seen. I don't know. I just think it's very it's as close to a crystal ball as you're going to get, I believe, when it comes to this kind of thing.
Within 30 days, it's like 91% accurate. So it's you're right. It's very accurate. This is one where I think I'm hoping, and I think it's going to be wrong. So Kevin Warsh, I read through and watched a lot of interviews with him from over the last few years. I don't think he's going to aggressively cut rates. I think right now he knows Scott Bessent, who's Treasury Secretary, his old boss. They're in like constant contact. I think that's the reason why he's a front runner here. But you look at what we have this year. We have midterms coming up. We have Trump pushing on Powell to cut rates. He wants somebody that's going to aggressively cut rates. I just don't think he aligns with that. And not to say he can. I mean, Polymarket tends to be very correct, like you said, but I just don't. This is one case where I just don't think the prediction markets are right. Rick Riders from BlackRock, maybe he's been rising in the ranks. Obviously, my actual dark horse candidate is Chris Waller, and I think he'd be very good for our bags. He is going to cut rates. He's not going to just be a puppet though for Trump. He's also already a Fed member. I think that's a key thing to keep in mind here because essentially that would give Trump leeway as Powell exits his position to select another member and keep Stephen Moran on potentially, who replaced one of the Fed chairs that stepped down. Stephen Moran's been a dissenting member and voting for rate cuts multiple times now, heavier rate cuts than what the Fed actually did. He could exit at the end of this month. I think if they choose a member who's already a Fed member for the Fed chair, that would give them a little bit more leeway to keep him on and add another Fed chair member that will be in line with what Trump wants. So Kevin Warsh, look, like, again, betting markets tend to be correct. We've seen this.
Well, it is a bit far out still, right?
Well, maybe. We could see Trump announced anytime really at this point. I mean, I think they're expecting that it could be within the next few weeks. So, May 15th is when it will actually happen. So we'll see. The other one that is interesting is Michelle Bowman. She's at 1%. She also is a Fed member. If you look at Trump's first term, he actually chose Powell, by the way. He put Powell in his position, which is kind of interesting with all their back and forth now. Powell was very much a dark horse candidate. He was a Fed member as well. So it kind of aligns with both of those candidates, but we'll see. That's kind of my thesis. We'll see how this plays out. But regardless, all eyes are going to be on this. I think this could either be a negative for our bags or a very much positive, depending on who's chosen. And I think that even though they take over May 15th, and I think the second half of this year, we could, based on who's put in there, see a lot of rate cuts. I think the markets, after the announcement's made and we start getting to that May 15th date, could start baking in some of those ahead of time, which is what we tend to see. So this is something to really keep a close eye on and pay a lot of attention to. Market structure bill. Okay. So this is the catalyst, in my opinion, that we really need if we want to see a full-on like alt season, DePIN season. Not to say they can't do well this year, but I think we need this legislation to pass. Have you been keeping a close eye on this, Neil, with the Clarity Act at all?
Not really. I mean, I know a little bit about the Clarity Act from listening to podcasts, but I mean, obviously, that's like, you know, insofar as it affects me, is really only through whatever you know, whatever effects it has on the market. There's, I mean, the EU and its regulation is nearly a full-time job by itself. So,
Yeah.
you know, and some of the stuff they're trying to do over here on this side of the Atlantic with privacy and stuff is just
Don't send out any tweets they
terrifying.
don't like.
Yeah, it's just anyway.
Crazy.
So yeah, look, I know a little bit about the Clarity Act. I don't know about this market structure bill, other than I've heard David Sachs talk about it on the All In podcast. But
yeah,
that's it.
great podcast, by the way. Okay, so we had the Genius bill for stablecoins passed last year. This is really critical, I'd say. This market structure bill. It's going to give clarity around which assets fall under the SEC, which fall under the CFTC as a commodity. And it's also going to cut down on some of this fraud. And I think the market manipulation, I don't think it's ever going to cut it down on all of it, but I think it could help with some of the stuff we're seeing with these exchanges and market makers.
How do you think it's going to help that?
What's that?
How do you think it's going to help that?
Well, I think that there's going to be extra reporting requirements. I think there's going to be extra transparency that's required by some of these entities to hold them accountable. Yeah. And again, I'm not saying it's going to wipe out all of it, but I think it should certainly help because we've seen a lot of manipulation. The main thing, though, for me is there's a lot of money that's sidelined right now. I mean, we just looked at that gold, silver stock market hitting all-time highs. Everyone's like, oh, you know, retail doesn't have money. I don't necessarily agree with that. I think that's true that half the country, if not more, is struggling right now. But there's still plenty of money sloshing around from retail in the stock market. I think there's a lot of people that are in institutional money that's waiting for clarity here, hence the Clarity Act. But we got to get this thing passed. And if we don't get it passed, we run the risk of this getting pushed into as late as 2029. Because unfortunately now crypto has been very politicized based on the president. And I think if they lose the midterms, I don't see this thing getting passed potentially until 2029. So I think this is a really critical moment. So, you know, Brian Armstrong with Coinbase pushed back on some of the language from our banks and the banks trying to have too much control. It sounds like they're getting back to the table, and I think they're going to have some discussions, which is great. And he's still optimistic this thing can get passed in the next 30 days. You know, we'll certainly see. I thought the timing is very interesting, by the way, that the banks are pushing back on this bill. Brian Armstrong removed support from Coinbase. Trump kind of pushed back on Brian Armstrong, and then a day later threatened a lawsuit against JP Morgan for debanking him. I'm like, I wonder if the timing of that isn't just coincidental and there's some leverage. There's a leverage play here over the banks to get back to the table in good faith. I don't know, but I do know this is critical. So right now, Kalshi has it at 27% chance for April. I'd say that's very unlikely. It still has to go through a write-up from the CFTC, SEC side of things, then go to the Senate for a vote, and then I believe go back to the House for a vote with the changes, and then it gets to the president's desk if there's no further changes. There's still a lot to be done here, but if we can get it done before May, I mean, that's a lot of upside that's not in the market right now that I think could be very beneficial. The other thing I want to talk about is this Russell 2000 chart. This is a small caps. So this is a really good gauge of risk appetite in the market. We just recently saw this break out to new all-time highs, obviously down a little bit right now with what's going on with all the tariff scares. But if we continue to see this breakout, this has historically led the way. If you look at, there's a high correlation with Ethereum and other altcoins. So again, this is all small cap stocks. We've seen while the stock market is hitting all-time highs, a lot of that's been tied to really the Mag 7, Mag 8, the most valuable stocks, kind of showing that people are a little bit risk off still, right? They're not willing to invest in some of these smaller market cap stocks. This is a really good sign for risk appetite coming back. The fact that we've been hitting some all-time highs here. So certainly something to keep an eye on. One other thing is copper to gold ratio. This is a good gauge of whether we're seeing expansion in the economy. So generally people flock to gold as a safe haven if things are looking a little bit hairy, which we've been seeing. Copper tends to move up in price because it's needed for manufacturing. It's needed for economic growth. So if you start
a ton of stuff.
What's that?
It's needed for a ton of stuff. Your man,
Yeah.
Chamath Palihapitiya, was talking about how that's one of his predictions for 2026 is that copper is going to moon, basically, because it's needed for everything, and there's a supply issue, seemingly.
There is a major shortage. Yeah. So that's where I've repositioned. I was in, a lot of silver funds, 2X silver funds last year. Repositioning copper is one of those plays. If we start to see the price of copper exceed the price action of Bitcoin, this is where we start to see this expand. That's very good for the stock market, and it's very good for risk on assets in crypto. You'll see here, this fell off a cliff after 2008, right? Because people flocked to gold. We saw the economy contract. So that means this would go a lot lower if you're kind of moving to recessionary territory. We've been hovering way down here. A lot of this from quantitative tightening. If we start to see easing take place, start to see things expand, risk tolerance come back, this should start moving up. We're starting to see a little bit of that, but we need to really see that break out. And the other thing I'll bring up before we move on to that DePIN stuff is the ISM. So you're seeing this, the PMI is a good gauge of whether the economy is contracting or expanding. This is something that Raoul Pal talks about a lot. We need to see this break above 50. That would mean that we move back into expansionary territory. Very good for crypto, especially altcoins. This is something that's been on a 4-year cycle historically based on debt cycles. You'll see we've expanded. It's coincided with every alt season we've seen, every major crypto boom we've seen. We've made this big move with crypto, really Bitcoin. We saw a small alt season back in 2024, all during a contractionary period, which is unprecedented. A lot of this because we moved into quantitative tightening so aggressively. If we start to see now that things are easing up, we start to see this break up above 50. That is a great sign for those people that think the 4-year market cycle is broken and that we can move into a super cycle or 5-year market cycle, whatever it may be. So this is something I'm keeping a very close eye on as well. Any thoughts?
No, I mean, I think that's mostly on the money. I think the one thing I would have a question mark around is the comment around the most recent what would you call it, uncertainty in the market, being around, about things being risk off essentially because of tariffs. I'm not sure it's just about tariffs. I think, I don't know how much international news you get on that side of the pond, but over here, there's a lot going on in terms of with Trump threatening Greenland. The EU does not like that at all, and there's a lot of there's a lot of posturing going on. There's a lot of politicians in the EU saying, threatening us is one thing, and then saying if we don't do it, you're going to whack on 400% tariffs on champagne or whatever it comes from the EU to the States, and with Canada going to China because they're like, F you, USA, if you're going to hold us at gunpoint, we're going to tell you to go F yourself, basically. So I don't know. I think it's bigger than just tariffs in the sense that tariffs were a thing last year. I think genuinely, I think Trump may have overplayed his hand. But we'll see, I guess. I feel like we're closer to war now than we've ever been.
We'll certainly see. I think Canada is going to regret that decision. Personally, I think Carney will.
Maybe.
I certainly think so. But I think that things will get worked out, with Greenland. I've done a couple of deep dives on the Greenland situation on my live streams. I'm editing some videos that really dig into the details there. I agree. I think if he moved in a non-diplomatic way with a military action, that would be about the worst move we possibly
Well,
make.
it's the end of NATO and probably the start of World War III. Probably.
Could be, yeah.
I don't
No
think.
doubt about it.
I think the US could absolutely crush Europe, by the way. But I think there would be a new world order, and I don't think anybody would be happy with the outcome of it. And I think there is a conspiracy theory out there that's like, well, he wants to. You won't have elections if it's a time of war or something like that. So it's a way for him to continue to hold on to power after his term is up. I don't know. It's all a bit conspiracy theory-ish for me now, but yeah, I don't know. I think that's why the market, just to stay off, just to veer us back onto crypto off politics. I think that's why the market is risk off, basically, is because there's a lot
going on. There's a lot going on in Iran right now. There's also a potential government shutdown again, by the way, at the end of this month. And then, I don't know about the time of war. It's, I haven't put my tinfoil hat on that much. Not to say it's wrong. I think right now I read the Denmark intelligence report, and they did in that report signify that China's making a play, not immediately, but it is in their plans to make a play on Greenland and the Arctic from a military perspective. Also, Russia, obviously, they're a little bit weak right now because of their war with Ukraine, but they also are posturing for that Arctic region.
Nonsense. Prior to all this nonsense coming out from Trump, sorry, I don't mean.
I don't know. This is from the Danish. This is the Danish intelligence report. I don't know if you've read it.
But America are allowed to keep troops in Greenland right now as many as they want.
Yeah.
Been
but you gotta
decreasing the amount of troops. They've been decreasing the amount of troops there for years. So if it really was a threat and a concern, just put more troops there. You don't have to.
You have to let me finish my point.
Sorry.
But I don't think that's multiple things can be true here. So if you read that Denmark report, I think there is a military threat there from those countries. Now, to your point, because it's, we're part of NATO, we had like 14, 15 military bases there we shut down. We have one that's open right now. We could move more military presence in there anytime we want. So I think there's more to this play. For one, I think there's a lot of rare earth minerals there that could be part of this play that they're trying to move on. And then the other part too is that this Arctic region is going to be absolutely critical as the ice melts up there. It's opening up new trade routes between the east and the western side of the world. And I think that's a large part of the posturing as well. So we'll see how it all plays out, man.
We'll take it because we want it is the only thing that actually really makes sense now, and that's fine. I mean, look, as I say, we could get too far down the rabbit hole on the politics side of things. We just don't know enough at the moment to say for sure, and it's very polarizing. So I certainly don't want to to start upsetting people with like my random ideas, you especially. But yeah, I just think it's. What's going on at the moment is not good for speculative crypto. It's not good for all of crypto, really, because when everything goes risk off, money stops flowing into the sector, all our bags go down. Projects suffer because the reality is if you have a token in your project, that is part of your day-to-day, making sure that it's healthy and alive and your token holders are happy is not that much different than owning stocks or whatever. Like on the NASDAQ, you've got to keep people happy, and once you have some of their money, they're going to kind of be a bit demanding about that. So it just makes everything more difficult when the market is down.
For sure. The one thing I would say that gives me any hope that we see less volatility through the rest of the year is that it is midterm year. And at a certain point, if they want to have a chance to win the midterms, they've got to stop messing around and causing all this volatility. And there's a lot on the line there. So we'll see. We'll see how this plays out. But I 100% agree with you. It's a lot of it is not necessarily stuff I agree with. On my channel, I just kind of break through the details. I talk about what's taking place, the different factors there. Try not to give my personal opinion on whether I agree with it. I'll just put it that way.
Yeah, no, I think that's absolutely the best way to be. And I think this is a really interesting conversation because obviously we have two very different views based on our geography of what's happening. And, I think that's quite interesting. It's quite interesting to have conversations with people from the other side of the Atlantic to see what it's actually like. Because honestly, there's one thing you can't really trust anymore. It's the mainstream media to tell you what's actually going on in the world.
100%.
So much agenda and so much bipartisanship everywhere, not just in the States. I mean, I think you guys are like, the gold standard of bipartisan media, but like the rest of the world is exactly the same. Here, the radio is absolutely, which is really the only media I consume. It's wild, the things that they say, the questions that people ask, like supposed journalists that are supposedly like neutral and things, and the way that they phrase questions, I'm just like,
no,
that's a disgrace. You're not a journalist. You're a hack. That is a disgrace of a question. It's so leading and so loaded that like the person can't possibly answer. Like it's bananas.
For sure. Yeah, it's changed. I mean, and then I'll let you go into your thesis, but I'll say that the one thing that has really changed, the news and the media used to be a lost leader. It wasn't a moneymaker in the past, right? There wasn't the 24-hour news cycle either. Denzel talked about this. It's like there's way more value in being first, even if you report something wrong and retract that statement later, than it is to be second. So people are always want to be first. They don't necessarily fact check. The other thing is there's too much money tied to the news now, and basically your advertisers dictate what side you're on. And again, that wasn't the way in the past. People were just reporters. They just reported the news. It was to get people on your network to watch your network television after the news. So a lot has shifted. And now there's just it's totally different than it used to be. And that's why, again, to your point, like, I think it's really, really important to fact check everything. I try to do my own research, like reading intelligence reports, like doing as much as I can, digging in without being influenced by media. I'm coming up with my own thesis. And I think critical thinking is something that's super, super important. It's going to be more and more important as time goes on. And I think less and less people are doing it. And that's the part that's scary to me.
That's why I like Grok on X now. The way you can click Grok and ask it like, what's going on with that? And it'll tell you, it'll just give you more information, enough information that you can actually either form an opinion based on that, or if you still think it's a bit suspicious or maybe Grok didn't get it right, you can go because it's giving you more information to actually be able to go and properly investigate the thing fairly quickly, right?
Yeah. Oh, 100%.
People used to say, on Facebook, like, where did you get that? Share your links or it's bullshit and all this. And you're kind of like, well, there's just no truth anymore. Society has a real problem when you can't agree on something that resembles the truth. And we've strayed too far off that path now. But in any case, this is a very interesting conversation. Absolutely nothing to do with
Grok gives you the links, gives you the sources too. That's the other thing. Like, even if you're using Grok, make sure to check the sources, because you can then do your own research to make sure that what Grok's telling you is right too. So it is on us, I think, to do the extra work to fact check. Like that's the main thing here. But to rein it back in, I would love for you to go through kind of your thesis for 2026 and run through some of the projects you're excited about. And then, I can run through mine. I don't know if you want to do it like go back and forth, or you just want to go through yours and I can go through mine. What do you think would flow better?
I don't mind. I'm conscious of the fact that we're almost at the hour mark, or we're coming up to like 50 minutes or something like that. So, no, I'm okay. I'm okay to stay on if you are, but I think I mean, look, there's nothing especially earth-shattering in terms of the projects that I have on my list. They're all projects that you and I have talked about before. There's nothing there that's too brand new or too risky. I think there's a bunch of projects that I've had on the show on the DePIN Coffee Hour that are going to launch tokens in 2026 that I am excited about, but I haven't included them in this because, mainly because they don't have the token yet, and yeah, I wanted to kind of take a little bit more of a long-term investment thesis on this. So my attitude was, or the question I was trying to answer, I suppose, was like, if my best friend said to me, look, I think in 10 years, DePIN is critical for humanity. So I agree with you, Neil, on that, and which I believe. So with that in mind, what could I put, like, I don't know, $100, $1,000 on today, with the view that I just put it away, and if I pick 10 things, maybe 2 or 3 of them end up being worth, a serious multiple, like 100x, 10x, 50x, whatever, some big multiple of what I put in. So that was kind of my thesis. So it's much, much longer term, even though it's 2026. I think, yeah, again, it's like I was coming at it from the point of view long term, but what's good value right now to buy. So with that in mind, on my list, I have Render, Filecoin, Arweave, Theta Network, LivePeer, Akash, IONET. Helium is really interesting, and HiveMapper and Demo. They're kind of my main picks, for want of a better word. We can dive into why, but maybe it makes sense for if you want to share your perspective on it, then I can just add in my bits.
I think it's really smart to pick the GPU projects. We talked about this we did a session where we talked about the GPUs. Yeah. I encourage people to go back and watch that, because we didn't just talk about the projects, we talked about the landscape and really the power issue. And I think that's going to be pushed to the forefront this year. We've already seen a couple of AI data centers that are built out that can't be turned on. And that's a little bit scary, because the vast majority of the GDP growth in the US has been tied to, economic growth around data center build outs for AI. And like the next part of that is, okay, well, once they get built out, they need to be turned on. Then we have to see economic value driven from those data centers and from the AI. If we get to a point where these things are built but can't be turned on, that's gonna be a big problem. So that's a big reason why I think these GPU projects that you just mentioned, on your list, I think they could do quite well around that thesis and actually get usage right too. So I think that's a big factor there. That's a big reason why I'm also big on energy stocks. I got into some solar stocks last year. With the price of silver skying, I'm looking at natural gas now. That's been having quite a run recently. Things that energy sources that can be turned on very quickly for these AI data centers. But I think that's a really good call. Now, I'll say this much. Going into this market cycle as a very, very similar mindset as far as, okay, long term, maybe not even as long term as your 10-year time frame. What I've seen though in this space is that it's such a nascent space. There's so much volatility. There's gonna be a lot of times where things get overvalued and undervalued. Right. That's over time going to diminish, right? As we've seen with other industries, other markets as they mature. I think the way my mindset's changed is like, I need to take advantage of some of that volatility. Whereas in the past, I didn't look at it that way. I thought, well, if I'm just looking to buy a token, wait for it to pump and sell it, that's not true conviction. In my mindset, that was kind of how I thought about it. And I was like, then this is not a serious space. I've changed my mindset on that a little bit just because of, how inefficient the markets are still. Okay. So that let me just start off with that. To that end, I want to show you something, because I'm not a trader either. I want to make that clear too. I'm not. I don't read charts and trade on a daily basis. But something you said earlier, which coincides with the Warren Buffett mindset, which is be fearful when others are greedy and greedy when others are fearful. Right. And I happen to find this specific fear and greed index. Have we talked about this one before?
The fear and greed index?
This one specifically? I don't know if we brought this up on our other discussions.
I mean, I think most people are fairly familiar with the fear and greed index at this point. CoinMarketCap actually have a widget for that on their homepage now.
They do. And actually, this one has a widget I have on my phone. So they're all calculated a little bit differently. There's different inputs that go into the fear and greed index for Coinbase, for CoinMarketCap, for this alternative.me. This is the one that I found to have the best correlation, specifically with market tops in this market cycle. So one of the ones you mentioned, Helium. And you'll see a lot of charts look a little bit like this, right? And I think Helium's a great project, by the way. And I think long-term, I think they're moving to a point where they're profitable. So you don't have to worry about them having enough runway. And I think that over time, we're going to see this thing appreciate. But we've seen a lot of these charts where it's like, hey, big pump at the early stages of the project and then die down. Next market cycle, still a pump, not as big as the original one, and then kind of dying out. And I think, this is something we need to be willing to look in the mirror on and think, well, maybe there's a problem here, at least in the short term. Okay.
Mm-hmm.
What I think we're seeing, and in fairness to Helium, they kind of paved the way for DePIN, but I think there are some mistakes that have been made. And in particular, in this case, they had a lot of dilution early on. And I think, they started off the IoT side of things. Obviously, they needed a pivot, and that's not unlike other startups. That's very normal, actually, in the startup space. But when you're looking at the crypto aspect and you have a set amount of tokens, and you use a ton of those tokens, a very large percentage of those upfront in ways that didn't necessarily bring value to the project, you now have a lot of dilution you have to overcome. So they've done a great job of pivoting. They've found product market fit. They have revenue coming in. They're on a great trajectory, but the price looks like this. You can blame market conditions to an extent, but in my opinion, they also have a bigger problem to overcome. And that is there's a lot of dilution, a lot of tokens out there, and a lot of sell pressure they have to overcome. I think it'll happen, but I think that they're up against, a tough battle here because of those early decisions. And for that reason, I think it makes sense to deploy with Helium. I think if you have a very long-term mindset, and like Neil does, I think it could be a great investment. But in the shorter term, I don't think there's as much upside as there's with a lot of these other projects on my list. And I will say this much too, and then I want to get your thoughts on this. You'll notice that things have kind of peaked on certain dates, right? So we saw this peak back on March 10th in 2024. We then saw another peak December 15th. And those are the two peaks that we saw in 2024. It just so happens that on this fear and greed index, those are both the times that we saw this thing hit 90. So March 5th, exactly 1 week later, we saw the market top. We hit 90 right around Thanksgiving. About a week and a half, 2 weeks later, we saw the market top. And this is something that you see with pretty much every chart in DePIN. Same thing is true of High Mapper. We saw that big run up on the Coinbase listing, very early stage of the project again, right? Big move up. Again, we saw this thing peak over here, first week of March, when the fear and greed index hit 90. So this is from the Coinbase listing that we saw the big surge up. Then we saw this big top with the rest of the market right around when the greed index hit there. We then saw it again the first week of December. Again, a week and a half after we saw that greed index hit 90. Okay, so another chart that shows that. If you look at pretty much any chart in DePIN for these older projects, you see it top out when that greed index hits 90. So to me, it's not necessarily a perfect gauge of, okay, hits 90, I sell. Oh, on the other end, when you have extreme fear, I just full port. It's a DCA for me. It's a way to know to take some chips off the table, start layering out when we get extreme greed in the markets, to layer in when we have extreme fear in the markets, and a way to play that volatility to an extent through DCAing in and out without having to necessarily be a trader. And that way I can play that volatility because the volatility is there, man. And I think if you're just holding through all of that, you are missing out on a lot of opportunity, in my opinion. I want to get your thoughts on that before I go with my thesis to 2026.
If you've got, that's what I would put in the bucket of, or in the category of edge. Like, so if you figured out some edge on the, on the 80% of the market that you can capitalize on, go for it. Like, I think that's great. Some people do that with trading ranges on a chart where it's going sideways for a while. I have friends actually who are traders who do that. They can spot ranges and they just buy at the bottom, sell at the top, and they do that over and over. Making a little bit all the time, and it adds up to an income. So, if that's the way you want to play the game, and you think you've got reliable indicators, happy days, go for it. I mean, that sounds great. I just haven't. I would have the widget on my phone as well if I was.
The widget on my phone.
I was using it for that. So you need to know when to sell to get out. But
I'll give you one more example. Demo, March 10th, topped out. Okay. We then saw it top out again. Look at December 8th. So again, coinciding with that fear and greed index, we saw it twice. Now, I will say, looking at this index, it's been a great way to time the top within, with it hitting 90. It's happened within a week to 2 weeks. I looked back at the last market cycle, same thing, by the way. When you see the extreme fear, you generally, and then we saw this August of 24 with the DePIN reverse carry trade unwinding. We're seeing this right now, obviously, for some period of time. Generally speaking, you have a little bit longer. The top happens quickly. The bottom, you have plenty of time to DCA normally. And that's what we've seen here, especially with the liquidity that got wiped out on October 10th. So now the one thing I want to really call out, though, is on Hive Mapper and HNT. We saw this big run up early stage of the project. We saw the same thing here with Helium, right? The big run up when we had that greed. So that's kind of what I'm looking at. Which projects can do that? So there are some kind of the perfect recipe, in my opinion, for those types of moves to take place. Early stage of the project, for one, because you have way less dilution. In particular, if you can find projects that haven't had a ton of unlocks or maybe any unlocks yet to employees, to an early stage investors, most of the time they have like a 1 year cliff, and then they have a vesting schedule over a number of years. When you look at Hive Mapper, for example, when we got the Coinbase listing, they didn't have any unlocks yet to their employees or early investors. So there weren't that many tokens in circulation. It was just people that had been mapping. So when you have low circulating tokens, you have a lot of buy pressure come in. There's not a lot of sell pressure to offset that. You can see pretty big moves. We saw the same thing with Demo. So early stage project hasn't had a lot of dilution, low market cap. And then I think you have to look at the fundamentals from there, right? Like, you have to have a really solid team. I think product market fit's going to matter a lot, and that they can actually drive revenue. But then what's the narrative going to be? Which projects haven't had their moment yet? So some of these we've talked about, man. But that's my thesis. I don't know what your thoughts are there. Like, I think for me, like, I want to catch projects that haven't had that big move up yet, that I do believe in long term, but that I do plan on rotating some profits out when we see the fear and greed index move back up again. So curious what you think there.
I think, I guess for me, it's around the definition of that big move up. I think things have changed a lot since. So like, I think that if you were to look at a chart of something like Helium or one of the players that's been around for years, and you were to use that as the basis of a model, that a brand new DePIN project that just started like in 2025 or something like that, I think that would be a flawed model. I think you would find that the brand new project won't follow the same price action structure, or whatever you want to call it. I just, mostly because in 2025 it seemed like for DePIN it was all down, right, and down was the trend in the market. I just want to share my screen for a sec.
Yeah, and by the way, this is something that isn't just this market cycle. This is something that goes back to last market cycle. So this is Filecoin, right? I mean, this is before their dilution back in 2021. Same thing. No, I do think that some of these projects that I'm going to cover after you share your screen, I think some of them have a chance, and one of the projects I cover, I think, does have actual chance to break this mold for DePIN. I'm going to talk about that, but to me, okay, Arweave, yeah, let's look at Arweave.
Okay, it's not specific to Arweave. I'm going to show you a few, but this is the exact same. You see the exact same thing with every single chart, right? It's like you look at a year, you think, shit, that was a bad investment. But you look at the last month, and it's pretty good, right? Now, I mean, obviously not since the 18th when Trump and Greenland and everything kicked off, but it's the exact same on every chart. If you look at every single chart, they all take a dive on the 18th or 19th from where they were, right? Prior to that, this was up at 414, from sort of three and a half. So very nice. I would say very positive trend on the short term. Filecoin, the exact same. Green dip on the 18th. Render. Yeah. I mean,
yeah, looking at the month. But if you zoom out a little bit.
No, I know, but that's what I'm saying. If you look at the year, red and down. It's the same for all of them. Oh, sorry, I changed my tab, but share this tab instead. So here we go. There's, what's that, Filecoin? It's the same if you look at it a month and the same if you look at it a year. Red and down.
Yeah.
Render. Let me share this tab. The exact same. Look at it on the month. Oh, this is quite healthy. This is actually looking really nice.
Yeah. So what's your time frame? I mean, that's this
sensor.
I'm looking at like, I'm not looking at a month time frame though. I'm talking about depends on your time frame. If you're trying to trade these things month to month, then yeah.
No, I'm saying I'm just looking at it from a trend perspective. Like I feel like 2025 was a bad year for DePIN by any measure. If you were investing, at the start and at the end, you would have thought, shit, like DePIN sucks, basically, is what you would have thought by the end. If the only thing that you looked at was the price action on charts. What I'm saying is, since the start of 2026, that trend was starting to reverse prior to this. If you take the shenanigans of the last, 3 days off the table, the geopolitical shenanigans is what I'm calling them, but obviously that's a bit reductive. But if you take that off the table, I think the trend had kind of started to reverse, and I think, I don't know, I guess my thesis is that the DePIN sucks idea is wrong, and that you're just a little bit behind where we're at right now, and that if you look at things long term, I believe that that's going to scale out. Now, again, right, we are in a situation where crypto is a tiny percentage of like the global net worth, the global asset value for everything. So, it is a little bit like being trapped in a room with a 100-ton gorilla, in the sense that geopolitics and the macro picture will influence everything. And
for sure.
Who knows? Who knows what's going to happen there?
Let me ask you this though, and I agree. Like, yeah, the market's recovered since October 10th. 2025 is a really bad year for DePIN. I would make that. I mean, let me ask you, looking at those charts for DePIN, would you say that's different than any other altcoin, other than the really large caps? I mean, I think
not necessarily, but I don't know. I haven't looked too deeply at other altcoins, to be honest. I've been completely. My mind is just and my wallet, with the exception of some AI plays. Largely, I'm just surrounding myself with DePIN the last while as my sort of specialized area of crypto, I guess. I haven't gone into meme coins too much. It's too.
Yeah, no.
It's a casino. I just so
coins,
that's been the thing.
But like alts in general, I would say 2025 is a really bad year for super risk on assets. So we've seen. We're seeing all alts kind of recover to an extent from, the October 10th situation. My point is that I don't think we've seen a true decoupling for all of DePIN. And I think that for me, there's a couple ways I want to play this. I want to play what I know has worked for me, which is, I got in early to Hype Mapper. I got in early to Demo. I know that has worked for me, is finding those projects before other people know about them. Finding the narrative that's going to happen, that other people haven't been paying attention to, and seeing a run up play some of that volatility, but also finding the projects that I think can break that mold and actually decouple. And I think there's some of that going on too. So I think that I'm trying to play both sides of that coin, but also quality over quantity, because that's something in the past I spread out a little bit too much.
Yeah.
So that's kind of my
so my thesis, just like, again, this is not financial advice. Nobody should listen to me really at all or anything I say, because what do I know? But my thesis is, find the projects that actually have tech that's working now, because the run-up time to getting something from ideation to fully functional product market fit is pretty big so far. At least that's been what's been demonstrated so far, in my opinion. So I feel like a lot of these projects are going to really kick off once they've built the tech to a degree where it's actually somewhat, it can operate at somewhat of a feature parity to the centralized alternative. So like if you're Akash and you're saying, well, we want to take down, we want to take down AWS, but we want to offer an AWS equivalent decentralized option for 80% less cost. Awesome. That's a really strong value prop, and it's great for decentralization, and I'm on board with that. I think that's great. But it has to be as good as AWS, or at least as easy to use and do all the same things, which, they're on the way, but they're not there yet. And that's a project that's been around for ages. I think once that project, for example, in the case of Akash, I think once they reach that level, which I'm sure will be soon, like I think 2026, but I'm not sure exactly. But just from speaking with Greg on the DePIN Coffee Hour, he alluded to them making great progress towards feature parity and having all of the things that an AWS enterprise customer would want. And once that revenue flows into Akash, then you get the things like the value flywheels that they're talking about actually working, instead of just tokens being emitted and there not being any equilibrium between the sell and buy pressure on the token. So I'm quite bullish on Akash. I think that's going to be great. I think on a long-term view, like my investment thesis there is put it in now, wait for 10 years. If decentralization wins, I believe Akash will win, because I believe they're smart enough. I believe they're established enough. I believe they put enough time, thought, and financial resources into the project to have a really good shot at doing what they need to do to get there. So that's kind of my approach. So maybe I'm a little bit farther downstream or down the development build cycle than you, because I feel like what you're saying is you want to get in really early and get in when they're really early stage, get it as cheap as possible. Although if it was a project that launched their token last year, you get it cheaper today than at the start of last year, unfortunately.
So it's a combination. It's not just buying these early. It's buying these early after you have extreme fear, like an event on October 10th. It's the market conditions combined with the project that hasn't had its moment, that's early stages. But there's also a project on my list that I have heavy investment in that has been around for a number of years. So I understand your thesis, like the tech matters. And I agree. I think for you to find product market fit,
the team as well.
The team matters. But here's where, to me, I've had to change my thesis a little bit. Is like, that's great if you have great tech and then you find product market fit and revenue. But if that takes years and you have a ton of tokens that you pushed out before you find that, you've got an uphill battle, man. You've got a lot of sell pressure to offset, and we've seen this with a lot of projects. So I think your 10-year time frame might be necessary for some of these projects to really find their price. You have to also have tokenomics that, in my opinion, are set up to flow value from revenue to the token. And I don't think we figured out exactly what makes the most sense there. Is it a open market buy and burn? Is it an open market buy and you hold it in a treasury to use those tokens later, so you're not kind of burning tokens into the oblivion? We don't know. So there's still a lot that needs to be figured out here. So I think for me, my time frame is a little bit shorter than yours, than the 10-year time frame for sure. Like Bitcoin, absolutely. Maybe some other larger caps, Solana's, Ethereum's, etc. But I think for DePIN, I would love to see that happen. And it's not something I'm saying, oh, I want to get in early and cash out on these things. I want to play the volatility, continue to keep a bag in these, some ones that I believe in for the long term, because I think there is tremendous amount of upside potentially if they can fix that problem. Because I think it is a problem. Right. There hasn't been a decoupling. These charts have traded the same as every other altcoin. To me, right, the fact that 2025 we saw fundamentals get stronger than ever and we haven't seen a decoupling is a problem. That means something's broken, in my opinion. And I don't think it's the fundamentals in the tech. I think it's that there's either an issue with too much dilution up front, or the tokenomic model and the value that's being driven from revenues to the token price to support it's just not strong enough. There's something that needs to be figured out, in my opinion.
Right.
So,
all right. Well, do you want to walk us through your tokens?
I'll walk you through my five tokens. Okay.
Okay.
And I do, by the way, I agree with you. I think the GPU projects, I don't have any on this list, but I think those can do quite well. I like Akash Network a lot, just for the record. All right, if you can pull up my screen here.
Sure.
Number one, Aoki Network. I actually interviewed Nils on Sunday night. Nice. I like the drum roll. Look, they're in robotics. Robotics to me is that next AI. You had your chat GPT moment that like brought in the masses. I think robotics is going to be, it's going to have their moment soon. They are building out that perception layer, man, and they've got revenue coming through the door already. If you look at their token, there's only a year and a half launched. So obviously launched into really bad market conditions. I would say they have not had their moment yet. Sitting at $32 million market cap. Unlocked. Sorry, go ahead.
No, just a chart.
Oh yeah. So they haven't had their moment. They launched in August of 2024. So they've been building for a long time. This is something we're seeing that I like to see, is like projects that have been building for a long time before they launch their token. They already have meaningful revenue. I think they will likely hit 10 million or more in ARR this year. Hitting the robotics narrative, Nils is amazing. Their CEO is freaking, that dude is everywhere. He's a grinder. And I think they not only have they found product market fit, but the traction they're getting is crazy. So this is one that hits on all of those: early stage, leadership, product market fit. You have low dilution. To me, this is one, and it has the narrative, right? Robotics narrative. So it has all those factors I'm looking for that I think could have a tremendous amount of upside. So that is one of my projects that I am certainly focused on. 375 AI is another one. This is one that I think I could have a 10-year plan on, actually. They have the leadership. They are collecting edge data. I think this is going to be another big theme, guys. These LLMs have pretty much scraped the internet for all the data that exists today. New data sets that haven't existed, that you can feed into these models that are very hungry, I think are going to be very valuable. This group is setting up cameras all over the billboards all over the country with NVIDIA chips at the edge to process at the edge. They had the leadership. Harry Dewhurst was the CEO of Linksys for a couple of years. He sold businesses that he sold data through for hundreds of millions of dollars. His team that he's constructed are all of his top people from the different places he's been over the course of his career. Fits the mold all across the board. Also, very early stage project, just launched after October 10th, which is why their token price is so down. Under a $6 million market cap. This is actually insane. His goal is to get this thing to over $100 million in revenue. Now, it's not going to happen overnight, but they're also doing some cool stuff with the app. But to me, this is like the biggest no-brainer in crypto at the moment. So I think that'll age quite well. Not financial advice, but this is one that I think I could feel very comfortable holding for a number of years. Their token unlocks to employees and investors don't even start till next October, and there's a 3-year vesting schedule from there. So you don't have to worry about a lot of dilution coming either. So very excited about them. Silencio is another one. One that hasn't had its moment. They just pivoted. So as opposed to just collecting noise pollution data, they're collecting data to train AI models with that voice data. Huge demand for that right now. They have 10 to 15,000 new people signing up on their platform per day. They have tremendous amount of revenue opportunity from this data they're collecting. This is a niche that has not really gotten crowded yet, and I think it's going to be some time before it does. Again, fits the mold, guys, sitting at under a $2 million market cap, so super low cap. They have the opportunity with the data they're collecting to hit like 15 million a month potentially in revenue. So you look at something that the market hasn't figured out yet. To me, this is a very obvious one. Again, hasn't had its moment yet. I mean, they just launched their token about a year ago. So new token, product market fit with the recent pivot, low cap, low dilution, solid team. Okay, so you're catching the trend here. Rover, another one. They've got crossover with robotics data collection. They are collecting LiDAR data, which is being used to train autonomous vehicles. They also tie that to the GeoNet network. So with the RTK network, they can get very precise location of that data collection. Autonomous vehicles is going to be is projected to be a multi-trillion-dollar industry. It hinges on the data that's needed to train these models. Rover is, I think, going to be a leader there with what they're doing. They're using the DePIN model to collect this LiDAR data so you can put their hardware in your vehicle. To me, meets all of the same demands that I have, at least for my thesis. Low cap, sitting over under $2 million. Low circulating supply. They are starting to have some dilution, though, to token unlocks to investors, to the team. So something to keep in mind there. But still a very early stage project tied to GeoNet, and hitting that robotics narrative, data collection narrative as well. And I think this can do quite well. They also have a very solid team, obviously their ties to GeoNet. And so those four kind of hit the early stage, like the ones that haven't had their moment, hitting the narrative, have all the pieces I want in a project. But this is the one long-term project that I think can break that mold. Break the issues I was talking about that we've been discussing so far, which is decoupling. Okay. And GeoNet, I think, can do it. And I'm very excited about this project. It's my number one DePIN holding, guys. So it's an RTK network for very precise location. So it works with the satellites to, instead of having 10 feet of accuracy on your location, you can get within a centimeter by tapping into their network. They have over 21,000 base stations around the world. They've got major presence in Europe, US, India, Brazil. Those are the top 4 markets, but they continue to expand. They're tapping into robotics. So on one end, they have agriculture, but robotics, they have drones. They're working with autonomous vehicles. And then you're going to have humanoid robots. All these are going to need to be able to know exactly where they are location-wise very precisely. And this is a chart that doesn't look like the rest. Okay. There hasn't been this big move up and then back down dead, and then move up and back down dead. This has moved differently than the rest of the market. And it's quite healthy compared to the rest, certainly down from its all-time highs. But there's a few reasons why I think this is. They didn't have a lot of dilution early on, like we saw with a lot of these projects. They have a very aggressive open market buy and burn model. 80% of all revenue goes to open market buys and burns. So they have true value flowing from revenue to their token, as opposed to some of the other projects we've seen that maybe you're burning out of a treasury or not doing open market buys or less aggressive. The other thing, and this is key, is that they didn't go to a centralized exchange immediately. They went the decentralized exchange route to start with. And I think we're going to see more projects do this. These centralized exchanges are very extractive. They require you to pay them a lot of tokens to be listed on their exchange. And early on, I think that's very unhealthy for a project because it causes a lot of sell pressure with those tokens you gave away. I think this goes along with the whole thesis of being very thoughtful, being very mindful about how you use those tokens, especially in the early stages. I think GeoNet going the DEX route, while at the time most people disagreed with it, was a really good move. And I think that's all of those things combined. And obviously the leadership is why we're seeing this chart look much better than the other charts across all of crypto, and especially DePIN. And I think it's the first one that we could see really break away, decouple, and I think it will then prove a lot of the DePIN haters wrong that keep saying DePIN's dead. So that is why I think GeoNet is primed here. So those are really my 5. Again, going through those: Auki, 375 AI, Silencio, Rover, GeoNet. And that's my overall thesis for 2026. Of course, also paying attention to the fear and greed index. Okay.
Very good. Yeah, I am actually a big fan of GeoNet as well. I actually not sure why that didn't make my list. I do have a bag of that. It's not my biggest holding, but it's definitely one that I definitely think has a very long-term future. They like you say, they've done things that the others pretty much haven't, which I take as being quite bullish. Yeah, just to quickly, we'll just quickly go through the ones that I had picked. That let me just share this tab instead. I'll just share my screen. All right, Render would be one of my bigger bags. Again, it's a AI DePIN kind of combo, GPU rendering for inference. So yeah, I just think the 30-day momentum is quite strong, and they've had a huge trading volume of like $1.5 billion. So it's still, I think it's around 85% off all-time high, if I remember correctly. So yeah, plus what I like is that the FTV and the market cap are quite close. So there's not a lot of emissions, that could potentially dilute the supply and affect that side of the supply-demand equation. So I also kind of think that they're very well established, and they've done pretty well until now. In terms of kind of, I suppose, news-based reasons to be bullish. Late 2025, 26, they rolled out Dispersed, which is the dedicated subnet for AI workloads, like training generative models and stuff like that. So that's quite like a new departure, I suppose, from the traditional rendering network, which is where they kind of started, which is the idea that the metaverse needed to be rendered, or at least that's why I got into them. I don't know, 3 or 4 years ago. So that's kind of why Render, I suppose, I think Render is still going to be good long term. Arweave, let me just share this tab instead. Yeah, look, it's DePIN for permanent data storage. I feel like data, energy, and like GPU power are kind of the 3 currencies are going to be the 3 things that have huge value in the digital world in the next 5 to 10 years, as we sort of evolve into a future of AI and robotics and all of that stuff. So yeah, obviously permanent data storage on chain is going to have an important role in that, in my opinion. So that's the kind of the bigger picture on it.
I think Arweave's tech is bar none, man. Like their tech stack is incredible, and the permanent storage layer is awesome. I really love what they're doing, definitely from a technology standpoint.
Yeah, and the AO mainnet launch, is something definitely worth looking into more if you want to look into Arweave. I just think that they're really smart people with a really great, as you say, really great tech stack. So yeah, Theta Network, that's something that Havelo integrated with recently. So I was looking at that a little bit because of that process, and They have a dual token model, which I thought was interesting. I think, I just think there's a lot happening there that's definitely worth further attention. Not exactly sure how that's going to play out, but they have partnerships with Samsung and Sony to integrate data nodes into smart TVs. So we'll have to see how that plays out in 2026. But yeah, that's another sorry, that's another reason why let me just change this, why I'm kind of bullish on Theta. I think as well, just all of these projects are just super undervalued in my opinion as well. So that plays a large part of it. Akash, I'm hugely bullish on Akash. I think without it being financial advice, everybody should consider going out and scooping up a bag of that. AKT.
Did they officially announce their move to Solana yet? I think that's what they're probably going to end up moving to, because I know they're leaving Cosmos.
Yeah, I'm not sure actually if they've announced where they're going yet. I think they were being a bit coy with that for a while. But they would kind of be the main ones. Life here as well. I've had Life here on the show. Was very impressed with. Was just very impressed with every time I interact with them. I'm very impressed with the level of intelligence being applied to the problems that they're trying to solve. So, I think being able to cut the cost of video streaming. So I guess that the sort of elevator pitch is that the Live Peer does for video transcoding what Bitcoin did for money, kind of cutting the costs of video streaming by 50%, seemingly. So yeah, again, their token is, it's down a fair bit, but again, if you look at it all time, it's not too bad all time. So I don't know. I just think this is one where I kind of believe more in the team. I think the project is good. I also think video and transcoding is going to be very important. So again, a longer term play. I think that's kind of they're the kind of main ones. Obviously, Hive Mapper, I'm big on, because I think we need an alternative to Google Maps that's decentralized and better, particularly with robotics and those kinds of technologies. That kind of stuff. You're going to want to be able to keep track of things, I think, and I could see, I could see a decentralized future where we're using tools like that to, as integrations into things that track where your robots are, or where your, air drones are, and that kind of thing. So I feel like Hive Mapper is a good one as well. And you mentioned Demo already. I think Demo is an interesting one. I'm not as I just don't know. I think that whole mapping and the car data is a space I just don't know enough about, but I do think, based on your recommendations and other people that I've spoken to in the space, that Demo is a solid project with solid leadership and a solid tech stack. So, I mean, really, that's all you can ask for at this stage. I think there's just so much that's not known about the future. So, so that's kind of my main 5. There are more, but a bit more established for the most part than the ones that you listed. I definitely want to talk to Nils from Auki. You've mentioned him a few times.
He's freaking awesome. Yeah.
I'm going to get him on the show if he's willing, and need to get somebody from 375 on as well. We've had Silencio on before, and Rover. Maybe we'll do an episode on robots, because I think, I do think 2026. I mean, for sure, the Optimus type robots. Like, if 2025 was the robot year for robot cars and self-driving, I think 2026 is going to be the Optimus type of helpful robot that helps you do stuff that's more than just like driving you.
I'd say robotics, compute with the AI data center issues, data collection that is new data, And then something that's not deep in is prediction markets. I think are going to be freaking, it's going to go bananas. So we're already seeing it, but like prediction markets are there are predictions from some billionaires out there that I was reading an article that prediction markets can be larger than the stock market and within the next 10 years. Yeah, I mean, it's actually insane. So I think prediction markets are good to look at as far as seeing what's baked into markets and seeing what sentiment is on certain things to understand the markets. But yeah, man, I think you're spot on with the GPUs. I think, again, data collection, robotics. Those are the ones I'm uber focused on. I think we have slightly different strategies. I think both can work out very well.
Yeah, I mean, I think do your research, like, before you get into projects in a big way. I actually, this is a bit messed up, but I like putting in a small amount into things before I've done a huge amount of research. If people tell me, like, aping in basically with a small amount, because I feel like once I have a little bit of skin in the game, it gives me the motivation to actually spend the time doing the proper deep dive and, finding out about things. It's one of the reasons I love doing this podcast as well, because I got a chance to talk to the founders and some of the team at a senior level of some of these projects, and you get a better idea of what's going on with them. So yeah, it's interesting. But I'm a real, like, for me, I think team is almost more important than tech insofar as understanding the team and their capabilities. Like, winners tend to win. So if you find CEOs and founders that have won before, they tend to win. They tend to continue to win because it's just in their DNA. Like you say, they're operators who just grind.
Yeah. I mean, like, pay attention to the true builders. I think we're going to see a bit of a reset. We're already seeing it. Like, some of the projects aren't going to make it. Yeah, I think revenue is going to be super key because it's getting harder and harder to raise capital in this type of environment. Granted, we did see some good capital raises late last year in DePIN, but
right.
You're going to see some of the in layer ones too. There's a lot of layer ones that are, in my opinion, are very, very overvalued. You look at their market caps compared to, there's a promise on the tech stack that at some point they've got to, generate fees or generate enough revenue to be in business. You can't just continue raising capital. So we're going to see some of these start running out of runway. So that's another key thing to think about, especially if you're looking at a longer term time frame. You really the not just the tech stack, but the product market fit matters because you got to have revenue to keep the lights on. And you can have great tech, but if you don't have enough revenue, you can still run out of runway and unfortunately go under, man. And I think we'll see some of that. Certainly across the space, not just DePIN, but crypto in general. Right. I do have hope about Daba, man. Like Daba, if you look at their metrics on their website, they have a lot of hotspots deployed. They have a lot of, revenue and coming through the door. Now, I'll say this much. Them, along with a lot of these projects, decided to push up their TGE because of market conditions. I mean, a lot of them say it wasn't market conditions. I think a lot of it is. Personally, but we need to me seeing things on chain, and I've spoken with their team quite a bit personally. I've had them on Spaces, I've had them on for interviews. They're at all the crypto events, so I have no reason to think that there's any claims that are inaccurate. So if their metrics are true, I think Daba is very promising. But I think once everything's on chain, revenue. You have tokens distributed and you kind of track everything there on the blockchain. I think that's when I think people will be convinced. So yes, I do have hope for Daba. I have quite like 25 or 30 hotspots through them. So I'm excited for TGE when it does happen. Hopefully soon, man.
Do you have a ton of hardware deployed for like different projects and stuff? I know you said you started off with Helium, but is that stuff all still out there in the world? I still have quite a few Helium IoT hotspots up and running now. It's gotten to a point on the IoT side, like if things
stop functioning, it's not really hasn't been worth my time in many cases because they're all external installs to go out and service these things. I mean, that's kind of where it's at. Like, I think it makes sense to deploy on the Wi-Fi offload side for Helium. If you've got good locations, man, you should. I think you should be out hustling on that. HiveMapper still have cameras out there, slowly but surely moving over to Bs with my highest value drivers that are out on the road a lot. Now, I'm looking at secondary market, to be frank. Like, you can find people that are frustrated with the project because the prices are down, selling brand new Bs for like 100, 150 bucks. Like, to me, that's something I have an eye on, and I'm moving certain drivers over to the B. Other than that, though, it's kind of interesting. So looking at these different projects, HiveMapper, I got in early, did a 34X. Nosana got in early, did a 350X. Demo got in early, did a 15X. It's like, in some of these cases where I deployed a lot of hardware, I would have been better off just buying the token and playing the volatility. Now, there's a lot of value though that I got out of.
That's not good.
It's not, but again, it's really a matter of, I mean, it's just math, right? When you deploy hardware, it takes time to recoup those amount of tokens. If you buy an extreme fear, you can accumulate a lot of tokens a lot faster. That said, though, if you were buying like the top of the market, there's no way you would have come out ahead, right? So it's a timing game. Right now, we've had extreme fear for some time. If we move into a period where the market is up and gets overvalued, those opportunities to buy tokens aren't there. That's when you want to be mining, frankly. And now, you look at something like GeoNet. If they break the mold, that can change. But a lot of my deployment versus investment strategy depends on the project, depends on the timing and the sentiment of the market at that point. So there's a lot that goes in there. I talk about a lot on my live streams, and break all of it down. And I do have a space in an hour and 15 minutes where we're going to talk about, is DePIN dead? Actually, a lot of the things we talked about here, because there's people out there that are all saying it's dead. So it'll be a very candid conversation about things that haven't worked, things that need to change, and projects that are doing it really well. So again, some of the things I talked about. So it'll be good. But anyway, man, yeah, I think it's a really good discussion. We covered a lot of ground. Not everything necessarily deep in focus, but some good stuff in there.
Yeah, good hour and 40 minutes or something like that, 35 minutes. Yeah. So thank you for coming along and sharing your wisdom as always. And I really enjoyed the conversation. Let's hope DePIN isn't dead.
Yeah,
just joking. I don't believe it is. And actually, I just think it's a great time to get in. If you're not already in, I think it's a great time to get in. Not financial advice. I just hope that the whole world doesn't explode in some sort of third world war. And it's funny to think that. It's funny to think that like 3 months ago I was joking. Like I was joking on this show with founders and stuff about like the dystopian future that we were staring into with AI, with frankly, in my opinion, not remotely enough controls or guardrails. Robotics coming, like probably advancing in a similar way with AI, and it's just maybe I watched too many sci-fi movies, but at the time I was thinking, holy crap, like in a couple of years, like we could literally be enslaved, like humanity could be enslaved, like my kids might grow up being literally slaves to AI and the robots, and who knows what's going to happen. And now I'm thinking, jeepers, like, imagine I was worried about that. I should really be worried about thermonuclear war. Anyways,
yeah,
on that exciting and
you know what, man, there's a lot of stuff to worry about, but you'd never leave your house if you're worried about everything. I try my best. You can't control any of it. Yeah, I try to worry about the things that are in my control as much as possible. I know that's not always easy, but I try my best.
Exactly. So there you go. There's a there's a nugget of wisdom for you all to take away with yourselves today, folks. Only worry about the things that you can control, and probably get off social media is another thing that I've been telling myself lately, because it's just a cesspool lately of
Crazy.
all I see is stuff that's just depressing and disturbing, quite frankly. And anyways, so with all that said, thanks a million for coming along. Thank you to everybody who tuned in. If you haven't already hit the subscribe button on Brad's channel, go do it now. DePIN Connection. It's the same on YouTube and X, right? It's DePIN Connection on both, right? And the same for DePIN Coffee Hour. If you haven't given us a like, a follow, subscribe, whatever, please do. It really helps both of us for the algorithm to reward us with extra viewers and more distribution and all that fun stuff. Until next week, or until next month, I guess, for us, be kind to each other out there.
Thank you all for tuning in. We'll see y'all next time.